Market's looking a little bit cool today, and we have not yet seen the immediate rocket ship directly to the moon that clearly and evidently a lot of people were expecting after that historic $19 billion liquidation event bloodbath that we saw over the weekend. But I maintain this is an excellent buying opportunity, and I have a few setups which look to be playing out right now that I'm going to show you and explain how I plan on capitalizing on this. Let's get straight into it. So Bitcoin currently at a price of $111,800. We have pretty much cooled off from the highs put in after this initial bounce, after the bounce that we got some steps back, right? We got the Trump taco. Trump always chickens out. But once again, I still think this is looking like a great opportunity to add to long positions and to get long. This has been pretty much one-way price action over the last few hours. You can see countless red candles on the way down, and I think it is pretty stunning to me still that people are very quick to forget and people don't learn, right? Look at this. It's happening right now, okay? $200 million worth of long liquidations over the last 4 hours alone. $250 million worth of long liquidations over the last 12 hours. And what this means is plenty of people jumped in long after the dip, right? They bought the dip, which I commend, but they did so with absolutely zero regard, apparently, for risk management, and they got absolutely wrecked. So, of course, there are a number of different ways in which this can happen, right? People can be shaken out of a position. That's called emotional capitulation. They just choose to exit early. They can have their stops hit, which means they are automatically sold out of those positions, or they can actually be liquidated. All of that equates to the same thing, which is dumping supply on the market. And that means that prices can move very, very quickly because increased supply, steady demand, prices must come down. That is the simple law of supply and demand. And that can lead to fast price movement, and it can also lead to overextensions of moves. But yeah, once again, I mean, absolutely great time to get long, but not worth blowing an account on, not worth getting liquidated for. People don't learn. It is absolutely fascinating. So you can see liquidation risk is skewed to the upside. And that means that the lemmings, the retail traders, have jumped in short because they see the price going down like this. And that means that the biggest opportunity that I see in the medium term is when prices start to come up again, we start liquidating some of those short positions, and that equates to forced buying onto the markets. And we could potentially move up very quickly through some of those liquidations. I am still long 0.7 BTC on a 10x leverage position. Initially, I was looking at these highs here, just discount the wick, right? That was the initial move up from the lows. I was looking at that as a kind of resistance turned support situation, but looking at the profile of liquidations right now, you can see between $112,000 all the way down to about $111,200 towards the bottom of this region. There is something like $230 million worth of long liquidation risk. If we refresh this actually, because we have hit the front end of that right now, you can see some of those went through already. And essentially what I was looking for there was something of an overextension through that range, which is why I placed my buy orders on BTC a little bit lower, down at $110,770, and that is a 0.1 BTC order. So I want to add into this long position. Now, the question would be, if I'm already positioned long, and as you might know already, I was positioned long actually on limit orders that I placed before this move down because we saw that there was a risk for liquidations to the downside. We somewhat saw this move coming. To me, the opportunity cost of exiting this, knowing that it's likely prices cool off and come down before we start going up again, isn't worth risk of not being exposed if we just start moving up again. I think a lot of people were disillusioned to how volatile prices are likely to be after such a down move as this. But once again, if we look historically, okay, to the last time we had Trump tariff FUD in the market, if we take just an average, right, of this move down, say you averaged in and you ended up about halfway down, from those prices to right now, you'd be up nearly 30%, and to the all-time highs, you would have been up over 40%. So historically, big down moves like this, big down moves caused by Trump tariff FUD, have proven very, very good buying opportunities, but prices can be incredibly volatile within that range, right? We're looking at the daily chart here, and I mean, just look at this price action. That is exactly the type of thing we're seeing right now, literally right now, as I'm recording this video. And as always, it seems to be right now, it is driven by liquidations. So it's absolutely stunning, once again, that people aren't learning, right? People are still exhibiting this behavior where, oh, price is going down, so I better get leverage short. Price is going up, so I better get leverage long after the fact. However, that is a good thing for those of us that understand this trend and they understand how to take advantage of it. Okay, if you're one step ahead of that, it can be a massive edge in the market, at least for as long as it exists. It seems to be that it's still alive and well, at least right now. I'm also looking at other markets, XRP. What I've done here is I've drawn a fixed range volume profile from the bottom of the move down to the top of the move up after that initial move down. And what a volume profile shows us is essentially how much volume was transacted at different pricing. And what we see with volume profiles is price tends to move quickly through areas of lower volume. It tends to anchor towards areas of higher volume, and it tends to then come back to fill in those areas of lower volume. So this line here is called the volume node, right? So this is the volume profile, this is the volume node, and that is the area that the most volume has been transacted within this time range. So I'm expecting Ripple to actually anchor towards that. This could be a helpful tool. Of course, it's not an exact science, right? It's still TA, but it gives us a layer deeper than just looking at a chart because it's actually telling us how much business has been done at various prices. So bids on XRP actually went for 2.43, a little bit higher than the high volume node here. And you can see we are bouncing away from that very nicely right now. It's a small position, right? We're currently up $5 on that, but it is doing what it's supposed to do. Again, I will probably add to that if we come down further. I kind of want to see how far we can go with this BTC down move and watch those liquidations coming through and see if we are getting the reaction as expected. If I just give that a refresh, okay, we're up to $219 million worth of long liquidations on BTC. And if we take a look at the map here, there's still some more to go through. So we'll see how this plays out. I'm awake, I'm active, and I want to see it in real time. Solana, again, volume profile drawn on here. I'm kind of expecting this to pull back a little bit further, to be honest. And once again, I want to see what the reaction is in BTC to assess whether or not it is likely that we continue to see this fall, with Solana potentially looking in to get in even lower down in this region. If we're looking at market sentiment, up to 42 today, up from 35 yesterday. Things are looking a little bit happier. But once again, it seems that that massive shakeout was not yet enough to shake out people trading on wild leverage in the markets. If we take a look at the ETF, ETFs are just an instrument that institutions can use to get exposure to BTC without buying the underlying asset. And we know that these institutions can still sometimes behave similar to how retail does, although this isn't a leverage market. And you can see 10th, a very small outflow day, $4.5 million net inflows. And the 13th so far has been somewhat of a bigger outflow day, $326 million so far. But I think if you take that in context of the month that we've had, right, towards the end of September and the beginning of October, these are pretty small numbers. We did see some resolution on Trump backpedaling, right? The TACO. That was Trump cooling his initial threats for 100% tariff increases on China. News here from investing.com. China's Ministry of Commerce on Tuesday confirmed that working level talks with the US continued this week, but said that Beijing was ready to fight any renewed trade war with Washington. I'm looking to capitalize on this right now, but there's always a but. There is room for this to go lower still, okay? If we take out the lows, I know it seems ridiculous from this point, but this whole move seemed ridiculous. If we take out lows from that initial move down, about $107,000 on Coinbase here, but even lower on some venues, down to about $102,000, I believe. It is possible we get into even more pain, right? Clearly, that shakeout wasn't enough to get out all of retail, to get out all of the leverage in the market. People are still jumping in leverage long. But I would maintain that that would still be a big buying opportunity and potentially an even bigger buying opportunity. So the name of the game basically is stay in as long as possible so that you've always got capital to act out those ideas, right? Yes, it's great to buy dips, but if you're getting liquidated, if you're part of the $219 million of long liquidations just in the last 4 hours, you're not in the game anymore. You can't take advantage of that. So risk management over everything, right? I'm not planning on riding this down all the way to another break of the lows. Although, as I've said, I am convicted enough in this move to stay long, even though I'm under the water on the BTC position so far. But as always, that's just what I'm looking at. I'm only sharing it with you for entertainment purposes. Nothing I say should be considered financial advice. There's plenty more where that came from. Catch you in the next one. Bye.